Bitcoin's price has been making headlines, recently breaking through key resistance levels, sparking excitement among investors. This surge isn't just a number on a screen, it's stirring the interest of retail traders eager for opportunities. With the Federal Reserve's recent statements on interest rates and inflation, the market has become a landscape of uncertainty and potential. Regulatory chatter is also heating up, as the SEC considers new frameworks that could reshape the crypto environment. So, what does this all mean for you as a U.S. investor? Stick around, because the implications could change your investment strategy this week. As we dive deeper into this week's market trends, Bitcoin has made a notable leap, currently trading at around $35,000. That's a significant increase of approximately 12% over the past week alone. The surge has investors buzzing, especially with the recent announcements from major platforms. Notably, BlackRock has been making headlines with their plans to launch a Bitcoin exchange-traded fund. If approved, this could inject billions of dollars into the market, further solidifying Bitcoin's position as a staple in institutional portfolios. For retail investors, this signals a growing acceptance of Bitcoin among traditional finance players. Meanwhile, Coinbase has reported a spike in trading volume, reflecting heightened interest from both retail and institutional investors. They recorded over $1 billion in trading volume within the last 24 hours, highlighting how the market's momentum is influencing everyday traders. On top of that, the Federal Reserve's recent decision to keep interest rates steady has given a green light for riskier assets like Bitcoin to thrive. This stability allows investors to feel more confident dipping their toes back into the crypto waters, especially when prices are on the rise. But it's important to remember that these gains come with tax implications. As Bitcoin's value rises, so does the potential for capital gains taxes. For U.S. investors, understanding how this can impact your portfolio is crucial. As we look towards the future, it's essential to consider how Bitcoin fits into retirement strategies. With the potential for growth, platforms like Fidelity are exploring ways to integrate Bitcoin into 401k plans. This could open doors for long-term investors seeking to diversify their retirement portfolios. However, it's wise to stay cautious. Market volatility is a reality, and a sudden downturn can change the narrative quickly. Keeping an eye on these developments and understanding their implications will be key for U.S. retail investors navigating this exciting yet unpredictable landscape. As Bitcoin's price fluctuates, retail investors are closely watching the market's pulse. Let's break down a concrete example of how a typical U.S. retail investor might engage with Bitcoin this week. Imagine an investor named Sarah, who decides to invest $1,000 in Bitcoin on Coinbase. Currently, Coinbase charges a trading fee of about 0.6%. This means Sarah would pay around $6 in fees for her transaction, leaving her with approximately $994 worth of Bitcoin. Now, let's compare that with Gemini, another popular US compliant platform. Gemini's fees can be a bit higher, around 1.5% for smaller trades. So, if Sarah were to make her $1,000 investment there, she would pay about $15 in fees, resulting in only $985 worth of Bitcoin after the trade. Now, let's say Bitcoin experiences a price surge this week, jumping from $30,000 to $32,000. For Sarah, that would mean her investment on Coinbase, worth $994, could rise to about $1,058, yielding a profit of around $64. Conversely, if she had opted for Gemini, her investment would now be worth approximately $1,017, netting her a profit of only $32. The trade-off here is clear. Lower fees can lead to better returns, especially in a volatile market. But here's what nobody is saying: many retail investors overlook how much fees can eat into their profits. In a week where every dollar counts, those extra fees could mean the difference between a solid gain and a lackluster performance. As we inch closer to tax season, it's crucial for investors like Sarah to keep track of these profits. The IRS will want to know about any gains or losses, and understanding the impact of fees on those figures is essential for accurate reporting. Ultimately, the choice of platform not only affects immediate returns, but also influences long-term strategies. Retail investors must weigh their options carefully, ensuring they choose platforms that align with their investing goals while keeping fees to a minimum. First on the agenda for this week is monitoring Bitcoin's performance closely. If the price approaches the $40,000 mark, consider setting a limit order. This will allow you to take advantage of any upward momentum without needing to watch the screen constantly. Next, evaluate your portfolio. If you find that Bitcoin now represents over 30% of your investments, it might be time to rebalance. selling a portion could help mitigate risk, especially if you're heavily invested in one asset. Third, consider exploring Bitcoin mining options if you haven't already. With the recent surge in hash rates, you might want to look into cloud mining services that require low upfront costs. This could be a viable way to earn Bitcoin without having to invest in hardware yourself. Fourth, check if there are any staking opportunities with Bitcoin-related products. While Bitcoin itself doesn't support staking, platforms like Gemini offer interest on Bitcoin holdings. This could be a great way to earn passive income as you hold on to your investments. Lastly, don't forget about tax implications. If you plan to make any significant trades this week, be sure to keep track of your transactions. Using a tax software tool designed for crypto can help ensure you're reporting accurately when tax season rolls around. These steps could help you navigate this week's Bitcoin landscape effectively. As we look ahead to the next 90 days, many analysts predict that Bitcoin could either surge or face volatility depending on market sentiment and regulatory developments. With the SEC keeping a close watch on crypto exchanges and new regulations potentially coming into play, how Bitcoin reacts could significantly impact your investment strategy. Keep an eye on institutional interest as big players often influence market trends. Retail traders like you and me need to stay informed and agile in this ever-changing environment. So, are you considering how Bitcoin fits into your retirement plans? And remember, tax implications could also play a role in your decision-making process. What are your thoughts on where Bitcoin is headed in the next few months? Subscribe to the channel for daily crypto updates, and let's discuss.